So let's talk about what happened last week. Monday, we saw the volatility index spike to 65. That's the highest it's been since March 2020, and only the third time it's crossed 60 since 2008. Because of that, there was a lot of chatter about whether or not the US stock market was entering into a recession. The spike in the VIX happened after the Bank of Japan announced they were raising interest rates. Japan has long had low interest rates, and therefore a lot of investing institutions have borrowed money in the yen to trade and invest elsewhere, including the high flying tech names here in America, like Nvidia. When the Bank of Japan announced an interest rate hike, those same institutions sold their more profitable investments to raise capital, and in order to cut their leverage in the yen, they now have to pay back what they borrowed at a potentially higher rate. So does that mean we're entering a recession here in the US? Well, looking at the VIX, it didn't take long for the VIX to sink back into the low 20s, closing the week at $20.26. Looking back, we can see that in 2020, the VIX remained elevated for months after the initial COVID period. So let's scroll over to 2020. And if we go back even further to 2008, you can see that the VIX was again elevated for months. So what are we looking for now? If the VIX continues to approach 40 throughout August, then we could be looking at an increased uncertainty in the near-term future of the US stock market. The Federal Reserve has been signaling that they are considering an interest rate cut in September due to the growing level of unemployment. The unemployment rate has ticked up 0.5% in the last 12-month period, triggering the Somme rule, which has the street worried, although Claudia Somme herself said that the setup that caused unemployment to increase 0.5% isn't the same this time around as it has been in the past. Therefore, a triggering of the indicator doesn't necessarily mean it'll lead to a recession like it has in the past. So does that mean that we're in the clear? Look, the market is overbought. You can see that here, the RSI, the stock market's trading above its RSI, and it's trading above its moving averages. We've been looking for a reason to take profits off the table and pull back some. But we've also witnessed breadth thrust coming out of the last Fed meeting, and there's no evidence to suggest that even if the top traded names in the market correct, that the stock market as a whole can't continue to go higher.